What's going on, everybody? Michael Silva here. You're watching the Daily Stock Market Brief, the show that I do Monday through Friday, 5 days a week. We use technical analysis and market analysis to get a good idea as to where the market might be headed next. Today's show, I'm going to try to run through these charts. Don't got as much as time as usual. So, with that said, let's just go ahead and get into these charts. All right, welcome back. This is the market overview section. I just want to call out utilities. On Friday, I discussed utilities being the leader and wanted to see if there was going to be follow through or not into the week. And we still have a lot of time left in the week, but we saw relative rotation. You saw some strength coming into utilities. And what do you know? We saw it start off the week pretty strong here too. So I brought out a kind of a sector analysis chart here where you can see the relative strength. And you can see here it is getting above its 20-day moving average, which could be the start of a potential trend reversal here, the early stages. I called this out a long time ago when energy was looking just this much beat up, and now obviously energy is doing significantly better. You can see here on the XLU chart, we've just been catching just a solid bid here since 58.50 and just seen a massive move to the upside. However, there's still a lot of resistance in this 64, 65 range right up in here. I do feel like if we start taking out those levels, there could be more room to go to utilities, and utilities is typically more of a risk-off type environment, so it's something that we need to consider if this strength continues to push forward in this sector. Let's hop into the indices. Wilshire, we'll start with that. We broke out of this megaphone type pattern or descending broadening wedge, all-time high close above 42,000. We said that the target on this breakout was right around 44,000. We had the price percent oscillator crossover here too as well, and we just keep on moving forward. So the moving averages are crossing themselves over. It looks solid so far. We still need to be just very careful in this current environment as it stands right now, just because there are a lot of things at play right now. We have the Fed talking here this week. We had the stimulus checks, the stimulus passing. There's a lot of different just moving parts this specific week. So we don't want this to be some big fake out right here, but it does look like just pure solid strength as of right now. We'll get into some more indicators here that can give us more of an idea as to what we can expect. So let's look at the S&P 500. Very similar to the Wilshire, you can see all-time record high closed above this area of resistance. This could be the start of a progressive move. Now, this is already a very strong move out of the gates from when we hit this area of support. All the moving averages look solid. We're back above the 20 clearly. The 50, the 200, they're all sloping up. Price percent oscillator, everything is looking very solid right here so far for the S&P 500. And for this 30-minute chart, if you remember a couple videos back, we saw this big move to the upside, and we said if it potentially comes back to back test this area, that could make for a good trade. And if you caught that, congratulations. It's been a pretty solid move to the upside. You can see the last 30 minutes here really pressed forward. The overall target I think that we'll reach here on the daily is 4,000. It technically can go 4,100 on this specific breakout, but we'll see as time progresses. But there's no red flags as of now from the price action perspective. Dow Jones, another all-time record high. We closed, not significantly higher, up 0.5%, but up 174 points. And we reached a high of 32,973, so almost 33,000 there for the high. Nasdaq is still struggling to make another higher high right here. Obviously, this was the high here, then a lower high, and then we're still at a lower high. So we have to, in order for this to kind of change its tune, we need to break above this and then kind of hold at that level. This could be an inverse head and shoulder building. We did call out this target area, saying if it pulls back, it could be a very good area to go long at, and we've got a nice solid bounce. Price percent oscillator looks like it wants to cross over. That could be a good sign. Pretty solid day overall, up 1% on the Qs. The volume is very, interesting. The volume was pretty lackluster, to say the least. I did show a chart. I don't have it here in front of me, but on Twitter, where we got this buildup in volume, and that could sometimes represent short-term reversals. So this is potentially what we're seeing right here. We need to recapture the 50 period. We did recapture the 20 period, 318.34, 318. Yeah, hardly. We basically are sitting on it. And then we need to recapture this area of resistance up here too as well. So not fully out of the woods, but it's still showing some signs of strength. As far as the 30-minute goes on the Qs, this is kind of interesting. So we gapped out of this area, so it then became support, and then we gapped down, filled that gap, and then ramped up higher, closing this gap. So just, you know, this could look like an island reversal type pattern right here where it goes back down, but clearly we caught that bid at the last 30 minutes, not only got through 318, but started to try to press to take out the previous high here at 320. So interesting stuff overall as far as the price action goes. Very choppy. Like I said, we'll get into the stock market indicators here soon, and then the dollar, and then bonds and yields, and then I'll wrap it up with the conclusion. Russell 2000, all-time high. Close again, so we're starting to see a lot of all-time highs continuing to press forward here, and this makes sense from a seasonality perspective. March is really choppy, but then April you see some pretty big rips. We're not there in April yet, so is it going to hold true and we're going to see even stronger of a melt up? Very possible. It's very hard to determine, so we need to be very careful, while especially in a week where the FOMC meeting is taking place. 30-minute time frame. We had this breakout of the descending broadening wedge, bull pennant. We broke out of that. We discussed that when it was in this pattern, and we've just been kind of just trending higher and higher and higher since, and we closed at an all-time high today. So just pretty powerful price action. Indicators. All right, so this is where we get into a section where I can kind of see more of the internals of the market. So we're looking at the fear indicator, the VIX. And what I typically say is when we get into this 20, it's been acting as an area of support. So press with caution here. Make sure you're taking some profits off the table if you have that option. Not all stocks are going to be, just because the VIX go down doesn't mean that we can't have individual stocks that have good setups go higher and higher. So that's not necessarily what I mean. It just maybe this is that caution zone, okay? So every time we tapped here in the 20s, we see it spike up, which can bring back down the S&P 500, and we're clearly just this big move to the downside. We're right around 20.03. We still have this gap. We've been leaving this gap here for over a year now, so perhaps we come down to try to close it. Maybe we might start actually getting closer. It's been a minute since we tried, you know, in February, early February, we tried to come down here, and then over here in November was the last time. So volatility is still rather high, and we got to just do our best to keep a close eye on this right here. As far as the XLU over the SPY rate of change goes, the beta rotation strategy from Michael Guyad's white paper, this is not by any means the end of the week, so this can change, but we are above zero, and that does signal a risk-off environment to come if we close there on Friday going into next week. So pay attention. Utilities are on the rise. We've been seeing gold rise. We've been seeing lumber slightly decrease here. So there's a lot of signs going on in the market, even though the outside, outside looking in, just looking at the S&P 500, Dow, everyone's making new all-time highs, but then we have some interesting stuff taking place behind the scenes, and that, we got to be aware of. Lumber to gold ratio on the 13-week rate of change, we're still above zero, so that would indicate a risk-on environment, so equities, everything like that is fine. However, when we cross down, we need to just be more aware of when it crosses below zero, and we're not there yet, but you can see we've made some progress to get there in a recent month and a half. Then we got our BP charts. We had this bullish divergence right here on the S&P 500, moved down into that oversold territory slightly, and then we bounced from there. We called all of this out. Now we're just waiting to see if we get overextensions from the upside or the downside here on the RSI, so we're just keeping a close eye on this. You can draw a trend line from here to there, so that could potentially act as the level of resistance. We'll see, but as I see it right now, we're pushing that all-time high. This can still have room to go up higher, and it could have technically room to fall, so we'll keep an eye out for overextensions. Same thing goes with the BP-NDX chart. It was overextended, had a bullish divergence. We said I would not go short here. This is where I would be more apt to go long, and for sure we got that big bounce from the Qs. You saw that in the previous chart, and we're starting to continue to move higher and higher, but we're still below 50, and the RSI is still technically trending down. So like I said previously, we're not fully out of the woods, but we're not fully overextended or to the upside or the downside, which means that we still have the potential to go up higher and or to go down lower, okay? Now, as far as the NIMO, the breadth indicator, we are not overextended to the upside or the downside, but we did have a pretty strong day. You would think that this strong day would result in a little bit more breadth. It did not. So interesting. We still have a negative divergence here at play. So we'll keep to monitor this. We'll keep on looking for overextensions from the upside or the downside. We saw this one right here, and then we called out these little spikes to the downside, and we said, okay, well, it's a little bit of an overextended move. We'd like to see it a little bit lower, but that was an overextended move, and then we saw those rips. Let's get into commodities. We'll start off with silver. I removed the Fibonacci extensions. Silver had a nice update today, up 38 cents, 1.45%. I wanted to just call out here, we're still below the 50 period. We're still below this trend line. So that green line is actually technically resistance, and we're forming somewhat of a bear pennant, bear flag. So, keep an eye out. If we don't get above the 50 period and back above this trend line, then this short-term move could still be heading more to the downside, if anything. So be mindful of that. It does seem to me like silver, in the current environment, it could set itself up for a good rally, and it's been rallying decently, from its low point right here, but still it's really not making too much progress, and it's in rather a short-term bearish pattern. So just take note of that. Gold still within a down channel, lower highs, lower lows. Did find a nice big bounce right there from 675, right around that zone where we marked out ahead of time, and we're bouncing from there. It's not the strongest bounce of all times, but we are finding some support here, and we had the price percent oscillator crossing over to be a bullish crossover, but it's still below zero, which is not the greatest sign. So we're still trending down in this current environment here in gold. Bitcoin looked very strong. We talked about the breakout of this. It was looking good, and then we broke out of the previous all-time high. We hit a high of, I think, around 62,500. So solid move, and now we're starting to see, some profit taking most likely. It's pulling back a little bit. This red line should act as an area of support now, 52,500. So if we get in there, that might act as a little bit of a springboard. Take note of the divergences building right here on the RSI and right here on the MACD. Then we have oil, indecision type candle on the day, still holding above that 64 level. So this could be a potential flag consolidation, then move higher. Everything is pointing to higher in oil as of right now, because we have the trend is pointing up. We have the 50 sloping, the 200 sloping up. We have higher lows, we have higher highs. So right now this could just be a little bit of a breath. But keep in mind, like I said, if we crack below 64, I think it's an easy shot to around $60. And then we got to, keep a close eye on from that point. Dollar showed some signs of strength today, still not above 92. I want to call out this potentially is a bull flag. So bull flag, we broke above 92, taking a period to consolidate right here, and then we might potentially move higher. Keep in mind the long-term trend is still down, the 200 period sloping down, but we're well above the 20, well above the 50. So the short-term to intermediate term is starting to find its legs right here. So this could be a good sign for the dollar. If it does continue to press up higher and higher, that will put pressure on commodities such as oil, gold, silver, etc., and various other commodities. Notice how there was an update in the dollar, not the strongest update, but then you also saw a pretty solid update in the S&P 500 here. And typically these work in inverse. You can see lower highs and you have higher lows right here. And then really we kind of got above that 92 handle right here, and you can see that was when we started seeing pressure to the downside in the S&P 500. Then we fell, then we rose, and now we're just kind of at a standstill right now to see what takes place. As I see it, the S&P 500 is showing signs of strength. So if this is some sort of bull trap, that'd be pretty crazy. And then that means that the dollar would most likely head lower, which could strengthen things like the commodities. So if the dollar continues to fall, that can strengthen commodities, Bitcoin, etc. If we see the dollar continue to fall. But I think that's the long-term picture here, is the dollar is falling, but you never know what kind of squeeze we can have in the short term. Bonds and yields. Bonds relatively flat on the day. We closed at 1.62. The 30-year is down 1.25%, down 0.03. The spread is kind of just holding up high, still relatively high from obviously 2021, a big spike. So it's going to be interesting to see what the Fed says in regards to this, if they are planning on doing anything, or if they're just going to try to just jawbone the market, which does seem to be working too well right now, and then reacting to if something actually breaks. One have to wonder, like, they probably have the tools already created and in place to already know what could potentially happen, and then they're going to react probably very quickly, potentially even an overreaction, which can really, push the market even higher and cause even more risk, and just, I guess, what would be the word? Not uncertainty. Yeah, I'm trying to think of the word. Maybe if it comes to me, I'll remember. Let's look at the TLH. Distortions. That's the word that I'm looking for. There's a lot of distortions. TLH, this right here is setting up pretty nice, actually. So positive divergence in the RSI, that's a good sign right there to see potentially strengths come into bonds. That means yields could technically take a breather and move lower, and we're in kind of this zone of support. So let's keep an eye on this bullish divergence if there is some follow through. Now, to wrap it up with the conclusion, let me just tell you this. Trading in this environment, it's very choppy. Even though we're making an all-time high, you can see today how we kind of went up and then we went down significantly, and it looked like pretty scary. But then all of a sudden, the last hour or so of trading, or 30 minutes, we just saw some huge green bars in the SPY. So just very choppy. Be very diligent with your stop losses. Pay attention to see if utilities keeps on ranking up higher and higher, and if this relative strength continues to build. And then also pay attention to what gold and silver are also doing, specifically gold. And you can even look at lumber too, because these are all kind of warning signs that we can keep a close eye on, as to see if, behind all of these all-time market highs, if there's something bigger brewing behind the scenes that we just are not aware of. So that's all I got for you on today's market brief. Everybody, I will see you back